This is the 81st episode of the Effective Executive podcast and YouTube channel. And this week I'm going to, maybe it's something new, but I would like to give like an economic update because the economy does obviously impact businesses. It's what the economy is made up of. And the thought is I do this once a quarter. This is the end of the first quarter, so I thought I'd share some thoughts and some things that executives should be thinking about. And first of all, I'm just kind of looking into a crystal ball. You may not agree with some of the things that I have to say. That's perfectly okay. This is not financial advice by any stretch, although I do think that executives need to pay attention to their money at this point, their own personal money as well as their organizational uh, money. And this is more of a macro view that I've developed over time. I've always had one. It's changed over the years as I've gotten new knowledge. It's nowadays it's more influenced by Austrian economics as opposed to Keynesian economics because what I've seen is some of the failures of Keynesian economics to be able to predict what's happening. Um, and I've been influenced by people like Peter Schiff and also a gentleman by the name of David Hunter, uh, who is on Twitter, which I'll get into in a minute. And I basically have concluded from observation and some of the predictions and some of the things that some of these economists say. Paul Krugman is, uh, you know, Nobel laureate type of person, but he is wrong. I mean, that's my personal opinion. So you may have a different view of that, but my from some of the things that I've read that he has written, I think he is off base. So if that's the person you follow, hopefully this will provide you a different perspective if you're open to it. But anyway, so I'll do these quarterly updates, and like I said, this is the end of the first quarter of 2022. Now, I would preface this with prepare for the worst and hope for the best. And one other book that I've read that is interesting and listened to is Neil Howe's The Fourth Turning, and it talks about how things kind of refresh every 80 years. It's been 80 years since or 80 to 90 years, in essence, is what he says in his interviews. But it's been 80, 90 years since World War II. Go back 80, 90 years before that, you had the Civil War. You go 80 or 90 years before that, you have the Revolutionary War, and you can just go back in history and see that there are potentially some cycles in there. Now, whether it's just coincidence or whatever, it's an interesting read. I'll put a link to the book in the show notes. And the other person that I mentioned is Peter Schiff. Has written a book called Crash Proof 2.0. I think there was an earlier version of that. I'll also put a link to his book down there. And then the third person I mentioned was David Hunter or Dave Hunter. And he kind of puts numbers and some timing to things that Peter Schiff and other Austrian economists really don't as much. And some of it's based on the sentiment, are people more bullish or are they bearish, those types of things. So I'll just kind of do a real high level overview, or else this thing could go on forever. But Peter Schiff's view is that, I should say, the government and the Fed, and we, as far as we, the people that have elected some of these people, um, uh, are primarily responsible for our inflation that we're having now. That government more spending leads to, having the Fed have to print more. We use the term print more money, but in essence, make more money available to pay for things that are not paid for by taxes. And so we, in essence, print money, and we wind up with an inflationary status because of more money in the system, but in essence, the same or less goods available. And then we get into supply chain arguments and things of that sort, which I'm not going to get into here. But in essence, that's the formula. And I've listened to Peter Schiff and his views. He's an Austrian economist. I consider him that. He may not consider himself that. But his view is very much that with the amount of debt that we have in the U.S., that we're talking about raising interest rates right now, the Fed, and he's basically saying it's not even close to being able to fight off the inflation that we have. That if it is 7%, which it isn't, you can go to shadowstats.com and look at what the real numbers are. It's probably more like 14 or 15% if we use 1970s numbers. And he, in essence, says, the Fed can't. They're between a rock and a hard place. They can't fight the inflation that we're going to see. So this is one of the things that businesses are going to have to deal with over the long term until things blow up. And I don't know what happens after it blows up. And other than I think the United States loses its status, as far as the U.S. dollar loses its status, and a number of other things. But I recommend his book. Listen, he does put on a podcast, and it's really good to listen to. He's a libertarian also, which I have a tendency to be more of that than anything else. And it's just, if for no other reason, it's a different perspective and I believe executives need to listen to different perspectives. Now, the other person that's kind of put timelines to things, and they're not perfect timelines, but because they're still kind of macro views, but is David Hunter, and he doesn't have a book or anything that I know of. But he's on Twitter. It's at Dave H. Contrarian. Is his Twitter handle, and there's a lot of fake ones out there but you can find him. He in essence says that right now we will see a melt up. Now again, his name is Dave H. Contrarian, and so this is kind of a contrarian view. Some people are starting to adopt it. I found him very interesting, because he's been right on a number of previous occasions, like Peter Schiff had rightfully predicted the housing collapse back in 2008 before it happened. He was laughed at. There's a number of videos out there on that too. But by the Keynesians primarily. I won't necessarily name other names, but David Hunter, that predicts that we're going to have this melt up in the markets, and he has his predictions out there. Again, you can look him up. I think he puts out also a newsletter. I will probably join at some point. But then after this melt up, and when the sentiment for everyone in the marketplace is going to be so positive, everybody's going to be a bull basically. And then we're going to get the bust. And this global bust, is going to be like 80%. Now, his timelines have changed because of the Ukraine-Russian war. There's just different things that play into factors. He kind of keeps it up to date on his Twitter account. But he expects a global bust, I think, sometime starting in the third or fourth quarter of this year. And it will hit equity and housing markets, potentially being an 80% bust. You'll see the dollar collapse, and then it'll recover. He's got a number of predictions out there. It's interesting. And so far, he's been pretty accurate with regards to what's happening today. But if you look back, you'll see that some of his predictions were also pretty good. So I don't know what his leanings are as far as whether he's a Keynesian or he seems to be a little bit more pro-Fed than I am, the Federal Reserve. But uh, he's pretty strong in his predictions. He believes what he believes, and he says, I don't necessarily know the timing, but he's a little bit more time conscious than, let's say, a Peter Schiff. So if you want to, you can listen to him, and then after that, he says we won't hit the highs that we'll hit in the melt up, the one that's upcoming uh, for a decade. So we'll be in basically a global depression. So, and the reason I bring this up is not to depress people, but I think that organizations, that companies need to start preparing for things like this. If this plays out the way it is, and we have an 80% bust, I mean, think of all the things that will happen. Right now, we have a lot of free money running around that goes into to organizations that probably shouldn't be in business at all. They've never made a profit, and never their business model just doesn't work. But when you have lots of money running around in the system, you throw it in there, and then you pump it up, and you know it you get things that are not creating value for the economy. They're creating value for shareholders, and ultimately, I think some of those blow up and will crash moving forward. So hopefully, you're not in one of those. It's mostly tech. Has a lot of that. There's some good of that you'll see things that don't work, and then maybe another company will come along with a better model that can turn a profit. But my message in this episode is that executives need to start planning now. You've got to look ahead, and if by the third or fourth quarter we start into this bear market that takes 80% out of the market, what does that mean for your organization? What does that mean for consumers that had money before and now all of a sudden they don't? And I see a lot of. I mean, you have to even think about the social impact of this. What's going to happen when there's not enough food? The Ukraine, Russia provide a lot of food in the world. It may not hit the U.S. as badly as some other countries, but it's still going to impact us. And so I think it is wise for executives, both individually and for their organizations, to start thinking in terms of if the worst happens, what are we prepared for? If sales go down 80% or 50% or 20%, whatever it is. And again, depending upon the business you're in, if you're a Kroger, you're probably still going to have business, but it's going to change a lot of things. And I think kind of anticipating those, listening to futurists that are out there that maybe what they think will happen, I think is useful. Some of them that I've followed before, I think have gone off the deep end, but and a lot of them aren't even talking about a bust coming up. I'm I'm leaning more towards the fact. I would say there's probably going to be, if I were to put odds on it from what I read, probably 60 to 70% chance that we're going to have this global bust, and the social unrest and some of the things that happen that organizations need to prepare for now, especially if it's going to happen in third or fourth quarter of this year. And then, again, this could be a moving target, but I think organizations need to plan for this. So that was my message this week. If your organization, has risk management or whatever, I think it should be a conversation that executives start to have, and now's the time to have it. If not prior to now, but what are you going to do? What happens if this happens? And I think you just got to play out different scenarios. And one of the things that I do a free 30-minute conversation, give you some things to think about if that's useful to you. If not, I think that an executive team could probably come up with a number of things that they should be thinking about or doing if some of the predictions that I've talked about here come to fruition. But be prepared now. That's the message I wanted to deliver this week, and I'll catch you next week.